Is Bitcoin destined to see a further correction, or will we see a rally toward the upside? Let's go ahead and find out. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an excellent day today. In today's video, we're going to be discussing Bitcoin from a macro and short-term perspective, specifically focusing on two things. Is Bitcoin going to see a further high time frame correction toward the downside? And if so, how low could Bitcoin realistically go? And number two, what are the probabilities of a short-term bounce upwards, and exactly what are we looking for this bounce upwards to develop and occur? Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant news events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, Bitcoin, and the relevant economic news. You can also find us on our VIP channel with over 650 members. You'll get access to trading signals with exact entries, exact targets, exact stop losses, exact and exclusive analysis, and so much more. Not only will you get access to the VIP group, you'll also get access to a multitude of group chats, our trading chart and education group chat, our general chat, our trade setup chat, our news chat, our help chat, and our daily video chat. If you're interested in joining the VIP channel, go ahead and contact me via the pinned comment in the free channel for more information over here. Let's dive into the video, starting on the market data. So how are we looking as of right now? 24-hour volume is up 31%, sitting at 70 billion. 24-hour liquidations not too low over here, actually up 81%, sitting at 107 million. As for August, we are sitting down 11.06% with only about 8 days left in the month. Looking at liquidations, the vast majority of liquidations came from long positions as Bitcoin took quite an aggressive wick toward the downside. In fact, dropping a few percent underneath that lower level of support, a huge liquidity grab toward the downside. This crash happened in less than 5 minutes, wiping out a whole lot of stop losses for those longs positioned underneath this level of liquidity, seeing $80 million in long liquidations. Moving over to our volatility index, we can see the volatility index has taken a small little turn toward the upside, but overall our volatility index on the 30 and on the 60 are still sitting at record lows. In fact, the 60-day is continuing to record lows, sitting at 1.46. Moving to the DXY is currently retesting that major area of horizontal resistance at 103.5. A break and continuation upwards here will result in the DXY moving upwards into the 106 to 105 level. Of course, this will be very bearish for the markets, and of course, a rejection here could potentially provide temporary relief for the stock market and for the cryptocurrency market, resulting in a correction back to the dollar trend line. The overall trajectory for the DXY right now is of course in a uptrend, and this is providing a overall bearish narrative to the entire asset market. This is something we are watching going forward. A few economic key events are coming up very soon. We do have, of course, the PCE and personal income data, which is going to be on the 31st. We do, of course, have unemployment rate on the 1st of September, and then not too long after, we're going to have, of course, inflation data again. We also do have the BRICS Nation meeting coming up very, very soon, which could potentially impact the US dollar and the DXY. These are things we should be watching and paying attention to for the strength of the dollar. Moving into Bitcoin, guys, and the stock market is still very much in the same place. The S&P 500 took a small little bounce, but nothing too significant, still targeting a move towards this major area of liquidity at 4,300. The Dow Jones have moved down a little bit lower into this chunk of support, sitting at 34,400. Again, we do expect a small amount lower, but again, as we enter this range of historical orders, we do expect volatility to drop and the possibilities for bounces to start to increase. Let's go ahead, guys, and jump into Bitcoin, starting on the short-term price action today. Let's dive in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. So the short-term price action has been very unpredictable and incredibly sporadic. We have been moving sideways now for a few days, right? We're looking at the day range over here. For about 5 to 6 days, we are now moving sideways in this very tight range between 25.8 and 26.2, two key levels of resistance and support. 25.8 being the key level of support, which if lost will result in a strong correction. We did actually see that strong correction play out, a huge liquidity grab towards the downside. We were expecting 25.2. We came just shy of 25.2, we came to 25.3. We do still consider this level to be a bearish trigger, as it is still an area of liquidity on the chart, and therefore a drop below this will continue a downtrend, right? We're going to see a continued downtrend, or we'll see another flash crash toward the downside. We should still expect this scenario to play out until the bulls are able to reclaim control. The bulls will reclaim control on the short term above this area of resistance. We have this green box over here, which is representing the area of resistance between 26,200 and 26,300. A break above this level will force the price up on the smaller time frame as high as around $27,000. If we see a break upwards, this is the move we are looking for. If we see a break downwards, we continue to hold our shorts and continue to profit. As we've said already, we are not taking new positions in this range. We are only swing trading. We currently have shorts active, which we took well before this breakdown up around this range over here. We are currently holding onto the shorts in case we continue downwards. We will look for swing longs and scalp longs if the price breaks above this level, but until then, holding steady, holding patient. You do not need to rush yourself into decisions. So let's take a look at this chart from a technical perspective and a structural perspective. If we move upwards on the chart, we can see two very important levels of resistance, this being the 27.7 to 27.5 and the 28.3 to 28.4. 28.4 is, of course, that major high time frame level resistance. For us to become weekly bullish, the price will need to break above this level. So we are weekly bullish above this level. This is an incredibly important Bitcoin level Bitcoin will need to reclaim. Of course, that is going to be that weekly uptrending diagonal resistance on this high time frame chart. For the price to become weekly bullish and for the price to potentially become macro bullish and push higher, 28.4 needs to be broken back above. While we remain under 28.4, the probabilities for continuations lower into this lower 20 range is still on the table. We'll come back and discuss that later in today's video. Moving back to the small time frame, looking at the level over here, which is a $27,000 level. If we break above $27,000, we can see we have a massive gap in the VRPV right over here, and therefore we expect this range to be a range of low resistance and high volatility, meaning if the price is able to push upwards and break through this level, we then expect the next area of liquidity to be sub 28. We're looking for a range in about 27.6 to 27.8. This is the area we expect the price to move upwards into if we are able to break above 27. And more importantly, for that to even start, we need to break above 26.3. So from a technical perspective, how are we currently looking? If we take a look at the Bollinger Bands, if we take a look at the 50 EMA on the marker cipher A, which is the red line, we can see two things. Number one, we saw the Bollinger Bands widen aggressively, okay, and now we have seen them compress. This is a signal of decreasing or compressing volatility. Furthermore, if you don't like the Bollinger Bands, you can take a look at the 50 EMA. The 50 EMA is another representation of strength of price action, but more important, overall volatility over a period of time in reflection to other periods of price action, meaning the volatility in this area here is lower than the volatility in this area here, as the 50 EMA is further away from the price action. This represents decreasing volatility after a downtrend, which represents, okay, bearish exhaustion. It represents bearish exhaustion, meaning the bearish strength is being lost on the smaller time frame. That does not necessarily mean the price will go upwards, okay, because we are still in this range. We are not underneath, we are not above, sorry, this bullish trigger, but it does suggest that we are compressing for the next move. If we break down here, we are looking for another flash crash, okay? We are looking for another continuation. The targets for that is, of course, 25.2 to 24.4. If we continue upwards, then we're looking for a surge in volatility to push the prices upwards. If we take a look at a slightly higher time frame, such as the 4-hour chart, we can see that the momentum is starting to creep up just a little bit, right? We're still seeing negative momentum. If we take a look at the 4-hour chart, we can still see the market cipher B is of course in the negative, but we are seeing slightly bearish divergences popping up. We're seeing rising momentum, we're seeing falling price. This is a bearish divergence. So again, we're adding in the fact momentum is starting to rise, bearish weakness is starting to show up, and volatility is starting to drop. These are signs of bearish exhaustion, more importantly, bullish compression. We just need to see the price break above that liquidity level to continue upwards. Until we break above that level, we are going to potentially continue lower. So watch for that trigger point, watch for that flip in narrative, and watch for the shift in probabilities for potential directions. Okay, let's go ahead and discuss on the higher time frame what is happening and what these targets could potentially be. So as we discussed on a smaller time frame, guys, shorts are still favorable as of right now. You should be holding your shorts. You should be looking and expecting for lower targets as of right now on a smaller time frame, and of course on the higher time frame. The reason being shorts are favorable are two things. Number one, we are in a weekly downtrend as of right now, provided we remain underneath this uptrending level support. We have a weekly level of horizontal support at 25.2 to 24.4. This is an incredibly strong level of support represented by this green level. This is in fact is a 440-day long support level and very, very crucial in defending the current monthly to weekly trend bias. What I mean by that is under 28.4, we enter a weekly bearish trend. Under 24.4, we enter a monthly bearish trend. Very important stuff. The reason being the entire cluster of price action, okay, from March onwards will have been lost if the price drops below 24.4. Furthermore, 24.4 is not only the 50 EMA point on the monthly chart represented by the red line, it is also the Gaussian channel midline on the weekly chart. So a loss of 24.4 not only breaks a major 400-day long support, not only does it deviate us below 5 months of consolidation and uptrend, but it also significantly shifts the strength of price action from a technical perspective toward the downside. If we do fail to hold this level, as you can see, we have a huge amount of historical support within this range, and therefore we are looking for bounces and bottoms anywhere between this range. If we take a look at the structural analysis, we can see a measured move target from the head of the from the peak of the head in the head and shoulder pattern, right? We have a head and shoulder pattern over here, takes us down to around $20,000, meaning that is the maximal low target we expect from the breakdown of this level. This is not saying the price is going to go down to this level. What this is saying, however, is the price is broken down significantly. It is in a short-term horizontal consolidation. If we see an extended breakdown, we are looking for a move back into this range. If we see a break up, we are looking for a move back into this range. If we break up from this range, we enter a weekly bullish trend, we will continue upwards. If we see a loss of this horizontal support, that will confirm that the bearish strength has significantly shifted on the macro chart, and that will confirm a continuation lower. Remember guys, remember weeks and weeks and weeks ago, we were telling you resistance is resistance until it is not. If we see a breakdown on the RSI, we are most likely going to see a full-blown correction for Bitcoin down to 25.2. We saw the breakdown to RSI, we saw the breakdown to 25.2. If we're looking at the high time frame for Bitcoin, the bearish target upon the breakdown has been met. The next question we're dissecting here is, if we lose this current support, what will happen and can we bounce? So we've talked about the probabilities of bounce. We've told you what to look out for a bounce. If we're breaking down, we're looking for a full-blown breakdown over here. If we do break down, we're looking for our next targets, guys. Let's go over to the weekly chart and wrap up the video. Over here, guys, we can see again on the weekly chart, momentum. And this is a good thing. This is a good thing. Momentum, although was showing signs of exhaustion, we are technically still positive, okay? We are technically hanging on by a thread. Momentum is still positive as we do have the blue wave above the 0 point, and therefore we have positive momentum. We have a bearish divergence, which is a signal of exhausting positive momentum. So we have bearish weakness, okay? We have bearish strength starting to pop up, and we have bullish weakness developing on this downtrend. When will momentum on the weekly chart flip negative? Well, that will occur if we lose 24.4. Okay, if we see momentum flip negative, what was the last time we saw? We flipped negative over here. We saw a strong continuation under the Gaussian channel. Okay, if we go back, we saw momentum flip negative. We saw a continuation under the Gaussian channel. We saw momentum flip negative. We saw a continuation under the Gaussian channel. So again, if momentum flips negative, the 24.4K level is lost, we expect a continuation under the Gaussian channel, which would take us to that 20K level of support, which is this range over here. I do not, as of right now, expect Bitcoin to go to new lows. That is very unlikely, okay? We'll get into that in another video, but I do expect if we continue lower, we are looking for potentially 20,000, potentially 22,000. Thanks for watching, guys. We'll get into more detail tomorrow. I hope you have a fantastic day, and I'll catch you guys in the next one. Cheers.